Well, it bothers me for Amazon and Apple, and GoPro for that matter.
Do you think they're actually going to turn in those lower, or are they just lowballing the estimates?
I think we're seeing some issues with people buying the next phone, right? It shows up pretty clearly with Apple. And I think Amazon is actually beginning to mature, dare we say it, on the retail side. So I don't think it has anything to do with the rest of retail. I think we're going to see a very strong retail season. We're seeing record low unemployment. We're seeing record wage raises. I think we're going to see 5.5%, just like we did last year, unless something dramatic happens. And I don't expect to see anything dramatic happen.
Okay. Christine, Jan has talked about the resale model. I know rental is really more what you specialize in. Do you think either of these are starting to take a bite out of traditional retail as shoppers are looking for more unique gifting ideas? What changes during the holiday season for a rental or a resale model?
I wish I could say that rental and resale are making a dent in retail spending. I actually don't think we're at that point yet. And actually, from a rental perspective, because it is a gift you give yourself, it's kind of anti-cyclical. It's anti-seasonal, which is a really important point for other retailers, right? Is to know that while they're pushing out sales in their fourth quarter, how can they be using other business models to fuel the rest of the year? And rental, in particular, tends to be non-seasonal.
Your volumes must tell you something about the health of the American consumer.
Again, I think you have to get statistically significant in order to really make a comment on the health of the American consumer. What we're seeing is we're seeing people sign up for the services. We're seeing retention be very strong, so there's not wage pressure. But I think, like Jan said, you're seeing record wage growth. And so from a macro perspective, I think those are the trends that are more important as we look at the holiday season.
Jan, can we go back to your Amazon? I think you and I spoke a couple weeks ago, and I think we coined it as Amazon fatigue. Do you think we're getting to that point where there's just Amazon is an amazing company? Well, do you think that people are, they want to look for newer things? Maybe it's the rental or subscription business or just something else. American shoppers finicky.
I think a couple of things are happening. I think when the consumer's healthy and feels really good, they're more likely to be in the stores and doing things experiential and going to places where they can buy things because it's fun. I think if we were to see the economy slow, you'd see Amazon take back over.
You just called Amazon counter-cyclical.
I did, basically, yes. And what I'm saying is when the consumer's healthy and feels good, they like doing fun things. And Amazon is not fun. They're very efficient. They're good price. You get it when you want it. They're really good at what they do, but they're not fun. The consumer's doing stuff now they think is fun. And I think we'll continue to see it in the fourth quarter. We saw it last year in the fourth quarter. We saw it in 1, 2, and I think we saw it in 3, and we're going to see it in Q4 this year. But that won't go on forever because online's still taking over. And even in the case of when it's not going to Amazon, think about it. What Macy's is 25% online. Nordstrom's is, what, the third online now. So we're seeing these big retailers grow online. Walmart's growing 40% online, 35% online, so is Target.
But from a small base, and Christine, when you're looking at a retailer's holiday strategy, free shipping with no minimum purchase seems like kind of an easy win to grab share. But it's not free. I mean, that costs the retailer something.
Yeah, and I think this is the thing that we're not focusing on. While we're chasing top-line growth, we're not focused on the underlying profitability of these businesses, which has been declining for the last 5, 6, 7, 8. We're coming up on 10 years of steady operating income decline because everybody's chasing the high revenue growth, and it is coming at an extreme cost. And I would like to point out that even though we're talking about Amazon fatigue, they're still predicting 15 to 20% year-over-year growth. They're not negatively comping.
That's true.
So, Jan, who wins this holiday season in terms of companies and who doesn't?
Well, strong brands win, and retailers who are maximum taxpayers and not highly levered win because they've been reinvesting back in the business and they've been reinvesting in price based on having lower tax rates. So Walmart wins, Macy's wins, Kohl's wins, Nordstrom's wins, the old, traditional, strong, not highly levered, maximum tax-paying retailers.
And who doesn't win?
The mall doesn't win because we're still going to see mall traffic drop 6 or 7%, just like we did last year in the fourth quarter. So if you're mall-based, it's going to be much, much tougher. The other people that continue to win is if you're off-price, you win. If you're online, you still win. Those spaces win, even though I think Amazon fatigue is real.